A very good morning, ladies and gentlemen. Let's try that again. I know the chills got to us over the last 2 days. This morning, though, the sun decided to come out, and so did we, to make sure that we participate in a critical conversation that impacts all of us as key stakeholders here in the room. I'll take the opportunity to warmly welcome you all once again. A very good morning, ladies and gentlemen. Fantastic. That's the energy that we're looking for this morning. By introduction, I'm Gugule Tumfupi. I'll be the host and MC for today's program as we really look to actively participate in what remains a critical subject matter for all of us here in the room. Understanding the impact of the ever-evolving regulatory landscape impacting payments in South Africa, and of course the key partnerships that we have with key stakeholders right across the globe. I'm excited to have you all here today. I'm told that it's been a room full of familiar faces. It does feel like a high school reunion because a lot of you have had the opportunity to reconnect with old faces, some new introductions, but most importantly, bold conversations that will take place here today. As all of you are representatives of big businesses, large corporates, essentially managing and taking care of treasury and money movements and financial insights into the organizations you lead, we know that payments plays a critical role into the running of any business, corporate, and organization, but more so the economy. And that's why over the last few years, South Africa has remained incredibly competitive when it comes to ensuring that it keeps up to date with the innovation that has come on board in our payments landscape, but understanding that whilst we introduce heightened levels of financial inclusion, competitiveness, innovation, that we still do so within the realms of good governance, regulatory frameworks, and controls, because the safekeeping of our cash is a priority. So this morning, ladies and gentlemen, we're going to build up on an understanding and development that has been some years in the making in South Africa, primarily led by the South African Reserve Bank, who have introduced and actively participated in fast-tracking and understanding as to how we even the playing field rather, and the landscape where we do see banks and non-bank operators actively participating competitively through the regulatory frameworks within the payment systems in South Africa. So I'm excited to have you all here today as we will engage in robust conversation, hear from representation from the South African Reserve Bank as to where we are with the changes and adaptations that are taking place for Vision 2025. We're here now, and we certainly want to understand how is it that all of us as key participants play a role in shifting the landscape collectively. I'm excited to again introduce that there will be a panel discussion that will take place. This is where we'll hear from key leaders, both from RMB and FNB, who give us some insight as to how as an institution they are preparing themselves, actively working with the regulator and engaging with peers and colleagues in the industry to understand how we shift the landscape. So your ongoing participation, your feedback, your questions are welcome today. We ask that you keep them going and keep them coming, and there will be an opportunity for you to hear further insight as to how far we've been able to fast-track our development. On that note, ladies and gentlemen, I'm going to briefly run through the house rules. I trust many of you are familiar with the fact that the restrooms are located towards the exit as you make your way out to the main entrance. We are not anticipating any emergency drills today, so if you hear any alarm, don't run, but take it very seriously. And we do ask that you just follow the allocations to the emergency exits and signs. As you can imagine, we appreciate the fact that all of you run and take care of major operations and quite literally keep the economy going. So as you do take a moment to respond to a few calls, text messages, and the odd email, we ask that you do keep your cell phones on silent, just to minimize any disruptions to the speakers who will be on stage today, providing their insight as well as feedback. Again, your participation is strongly called upon because this is where we will be answering some of the questions, burning aspects that you want us to address, and of course providing you with clarity as key partners to FNB and RMB, and of course participants within the regulatory landscape in South Africa. Speaking about your phones, as you do keep them on silent, just make sure that you keep them close to you. I am told that someone has already lost their phone. It is with me, so if this wallpaper looks familiar to you, you know where to find me. I'm right here in the front. Alternatively, my colleague Janine will actually have it and will be able to hand it over to you. Anyone who has lost their cell phone. On that note, I'm eager for us to get on the road and, of course, actively participate. But maybe it's also just a good idea for us just to get a good feel of, some of the key issues that you'd like us to address here in the room. This is typically something that we often feel like we'd rather address in private, given the concerns that we have. But the truth is, we're all here to make sure that we're on an even playing field. So perhaps shouting out and sharing just a few of your thoughts in terms of your questions, the thoughts that you'd like to share, and maybe concerns that you have in terms of the regulatory landscape, changing payments environment. Any thoughts from this particular table? Oh, we shy? Let me pick on someone from the next table. Any thoughts here? Is it certainty as clients in terms of money, moving your money? Those of you who operate across the continent, currency fluctuations, controls, reserves? I'm seeing nodding heads. Yes, no, maybe? Okay, we'll get there. By the end of today, we'll have a lot more interaction. Perhaps you're also worried about understanding how it is that you can partner with the banks if we have any fintechs in the room. And maybe that's also a burning question that you'd like to address. But that's the point. Address the concern. Speak to the key players and the individuals who are leading and at the forefront of these developments that we see in the country, and specifically when it comes to RMB and FNB. On that note, ladies and gentlemen, we're going to take our opening remarks and have our very first speaker warmly welcome us to this critical conversation that again promises to shift the landscape. And when I say warmly, I know it's cold outside, but if we rub our hands together, just add a little bit more energy and oomph, I'm sure we'll be able to build up the energy and atmosphere for our first speaker. So ladies and gentlemen, please warmly welcome to the front of the stage, providing us with our welcome address this morning, the Provincial Head for Gauteng for FNB Commercial, Zach Sivalinga.
Thank you. Are we good? Thank you, Gugu. That's nice and interactive. So I was going to go, we normally would go a warm welcome, but a crisp, I know there's some clients from KZN, a crisp welcome. But the advantages of a crisp welcome is that you're going to stay highly focused and alert during this very informative panel discussion. So it's an absolute pleasure to co-host you this morning. So as Gugu said, I'm the provincial head for FNB Commercial Gauteng, and we jointly hosting with Tamara, the group head of Treasury and Trade Solutions at RMB. So ladies and gents, you're getting the best of FirstRand this morning. So, at one stage, SA was a global leader in payments. We were the early adopters of the world's first fast payment system. We called it real-time clearing. And as I was thinking about this event last night, I was thinking about the checkbook. We phased out checks about 5 years ago. And I recall clients and entrepreneurs managing their working capital and liquidity with post-dated checks as a payment mechanism. I mean, those were exciting times. And you fast forward to today, and emerging countries like India, Brazil, and China are further ahead on their digital journey, using simple tools like cell phones and QR codes. I know Arif will update us. The SAB has recently embarked on a payments ecosystem modernization program. And whilst innovation is imperative and efficiency is key, for us, most importantly, is a secure, stable, and safe financial infrastructure with fraud prevention at its core. So looking back at the launch of PayShap, I'm hoping we could be talking about cash as a distant memory a few years from here. So ladies and gentlemen, looking forward to the panel discussion. I'm also looking forward to learn a lot this morning. And thanks.
Thank you so much for that feedback there, Zach. And quite refreshing to hear, how it is that we are really recreating the payments ecosystem in South Africa. As you've mentioned, we've seen a lot of changes over the years. I might not have managed working capital, but I remember paying school fees with my dad's paycheck a few years ago. So maybe that gives you some context. But ultimately, what does the future look like? Will there be cash? Won't there be cash? But before we even get there, what ecosystem are we creating to ensure the efficiency, the trust, the regulatory, the governance, and the transparency that's required within our payment system? One thing's for certain is that the South African Reserve Bank has been leading the charge by partnering and, of course, providing a ecosystem and a landscape where various participants are able to engage actively through banks, non-banking institutions, and of course have been at the forefront of making sure that together we put in place a framework to ensure that all parties are involved. And today, that's the update that we're going to get further clarity on how it is that not only fintechs, banks, non-banking institutions all play a critical role within our payments ecosystem. Whether you're paying for your parking ticket, or of course, moving large volumes of wealth across borders to ensure that you're able to invest in various bond markets, invest in different countries. There's an intricate system that plays about in the background that many of us in the public might not be privy to, but that remains critical to keeping economies going. We're going to hear more about this now through our first and keynote address, which will set the tone and the landscape for the conversation we're going to have later in our panel discussion. We will deliberate on these outcomes, understand where we are in terms of the objectives and scorecard that we put in front of us, and further understanding how it is that we all play a critical role. Ladies and gentlemen, please welcome to the front of the stage someone who will provide us with our opening address, has played a very pertinent role within the realm of fintech at the South African Reserve Bank. Having initially joined back in 2018, took some time out to explore opportunities with the IMF by understanding the international landscape when it comes to fintechs, but has certainly stood us in good stead as a proud South African by coming back home and unpacking where we are in terms of our global competitiveness, how it is that we fare against our peers, and most importantly, making sure that whilst we want to be globally competitive, we remain locally relevant through the regulatory structures we put in place. Please warmly welcome to the front of the stage, Strategic Product Director at the South African Reserve Bank for Fintechs, Mr. Arif Ismail.
It certainly feels like I've come home. Gugu and team, I must tell you that the energy in this room is tremendous. I've modestly been in a number of sessions, and truly, I think you all deserve a round of applause right up front. So go for it. But being amongst family, which is what Lauren was saying to us this morning, I have to start off with something from a family member. I have a nephew who lives with me, and he often goes on, Megan, and he says to me, "Why do you go on about payment systems? Like, you tell us about clearing and settlement and payment service providers and TPPs. Why is this even important?" And I say to him the following thing. I say to him, I think of the payment system like the way you would think about an electricity provider. Okay? That when you flick the switch, you don't really think about what's going on in the background. But when you flick that switch, you want the damn lights to come on. And for payment systems, you know it well when you flick the switch and the payments don't work. Okay, so I prefer to give you my tagline, Ravi, right up front. Okay, that what you want when you flick the switch is you want the electricity to flow, you want it to be in real time, you want it to be cheap, no? As South Africans, you want it to be cheap? Yeah. Okay, you want it to be cheap, you want it to be affordable, but you also want it to be accessible. No? I see some nods. You want it to be accessible because it's a utility, it's a public good meant for all. Okay? And that's my punchline to you today. All right? That if there's, I'll say a lot of things, and hopefully I'll keep it to 20, 25 minutes. I'll say a lot of things, but if you walk away from this session, you've got to walk away thinking that from a South African Reserve Bank perspective, what we want is digital payments for all. So the way that I'm going to do this, and hopefully I'm going in the right direction, is I'm going to try and keep it again to 20, 25 minutes. I'm going to tell you, because Gugu's asked, what's the state of play? For many of you in the room, you're going to look at me and go, we know this stuff, right? But it's always good to kind of just sit back, reflect, take a look at it, and understand the type of payment systems that we have at play. The second one is inspired by the governors. They often tell us, you tell us a lot about the what, no, Megan? You tell us a lot about what you're going to be changing. Okay, digital financial ID and faster payment systems and modernizing the real-time gross settlement systems. You don't make it clear why we're doing this. Can you make it clearer? Okay, and what we've come up with as the PEM, the Payments Ecosystem Modernization, is 3 very crystal clear reasons as to why we're doing the PEM. It's odd sometimes for a regulator to step into a domain. I'll make that clear. And the third one I won't spend a lot of time on, but we call it the wagon wheel. You'll see why. It has a ton of initiatives around it that we're trying to get done. So let me go into it. All right. I often My corny joke is, because we're in Africa, I often tell the rest of the folks in the international community that we have, like the others, a big 5 payment systems, as you will find in any other jurisdictions. What are they? Megan's smiling. Okay, you must have a high value payment system. And for many of the folks in the room, you'll know what we mean. It's a system at the central bank, a real-time gross settlement system. And I often describe it to folks who are not familiar with payments, saying customers hold accounts with banks and banks hold accounts with central banks. Okay, and the essence of it is when you want the payment to be final and irrevocable, the transaction has to be between banks that settle in the real-time gross settlement system. So that's the first one. The second one is credits. You're familiar with that. Salaries, internet payments, and so on. The third one is debits. The fourth one is faster payment system, as you heard from Zach. And the fifth one is money transfers. Those are generally the 5 that we'll talk about. So where does South Africa land? All right. And I did apologize to Susan. The screens are a bit small, but we'll share the slides if you can't see it, but I'll talk through it. This is our real-time gross settlement system. As you'll see from 2020 up to 2024, this is amazing for many people. If you look at the blue line and I'm colorblind, so the yellow line, okay, this is values, right, that pass through the RTGS. The yellow line, if you think of every retail payment system bar cash, salaries, cards, my wife shopping, all kinds of things, all right? That's the value that we settle every day, okay, just for retail. It's very low. It's 8% roughly of the value in the total RTGS. What we settle in real time is 90 to 92% of the value. And often we love to quote this. The amount that flows through the RTGS daily is 582 billion bucks daily. Okay, bonds, equities, all kinds of settlement between banks in real time. And this is our guarantee to the minister and the governor that we will make sure that the payment system does not bring instability. You can imagine if that value was being settled, deferred at the end of the day. Do you have the money? Do you have the liquidity? Blah, blah, blah. We eliminate all of that, okay, by very cleverly designing our payment systems in a way that we manage that particular risk. So we churn the GDP every 12 days. So when governors say, this bloody technical RTGS system, what do we do? I say, hold on. This is not some technical system. This is how you effect monetary policy and make sure that the financial system is stable. Okay, first one, beautiful. My tagline for this one is, it's functionally rich. It's better than most RTGSs I've seen across 190 countries, but it's technically very poor. It's still off COBOL for those of you who are technically savvy and still running off mainframe and so on. We need to upgrade it. It's 30 years old. Okay, we need to upgrade it, definitely. All right. The second thing that I'll point to, and if, again, I'm not going to talk through all, but if you think of the 5 retail payment systems, you'll see that this is a volume slide. The bottom one is a 10-year kind of horizon, and you'll see that on the right-hand side, EFT credits, okay, credits, beautiful, wonderful growth. You'll see that our faster payment systems, though, okay, if I kind of circle the last 2, PayShap and RTC, volumes are not great, not great. And as you heard, if we were the pioneers, as Zach said in 2006, why are we behind? Most other countries, and I'll show you some data, okay, their citizens, even folks who come to your window and say, please, can you spare 1 rupee? And you say, I'm sorry, I've got no cash. They'll pull out a QR code and they'll say, no problem, pay me, all right? And this is a real example with Christine Lagarde in India. And so when you look at this, we've had wonderful growth. The bars on the left-hand side is card. We just call it ATM and POS, but it's card and good growth, right? The storyline here, though, is that whilst there's good growth, all right, our payment systems, again, from a faster payment system perspective, have not reached the masses. And you'll see that this is a little bit anecdotal, but in the last bar graph on EFT credits, you'll see a little bit of a tanking of the volumes, and that's because of migration. Okay, nothing wrong with that. Okay, nothing wrong with migration from EFT credits to RTC or PayShap, etc. But what we want is for folks who have not had access to the payment systems to gain access to it. So this is values, and again, I won't bore you with this. The punchline from this slide is that 8 Rand out of every 10 Rand in retail comes from EFT credits. I could spend a whole 1 hour talking about that. And generally, most of the other payment systems, their values are very low. So less than 2,000 Rand. And that's intuitive, right? When you're using your card and doing debit orders and so on, all right? I won't spend too much time on this one here. This is just industry average transactions. Let me skip to this one. The top graph is what you would see as ATM values off us, meaning, my ABSA card at somebody else's FNB ATM. But when you look at the bottom graph, which is SARB data that accumulates both on us, off us, and cash back at POS. So when governors say to us, cash in circulation is very low compared to anywhere else in the world, we say, take a look at this. Cash is still king. All right? And this means that more than 50%, that's our intuition, of all retail transactions happen in cash. Okay? We print in circulation 750 billion rand worth of cash. It costs us a ton, okay, to print that from a social cost perspective. This is the number of proxies for PayShap. You see it's not even getting to about 3 million, right? We have about 60 odd million people. What we want to see is greater faster payments transaction per capita, okay, or number of proxies per capita, as we move along. So that's just a snapshot, right? Hopefully it gives you a sense of, yes, we've got a big 5 payment systems, but we need to bring it to the masses, all right? So why then the PEM, all right? And I've coined this term called the red dot, all right? What do we want to get to? What's the punchline? Okay, the punchline is, if this is where we were in 2014, and it's not proportionate, right? We've got card, electronic payments, cash, and we used to have something called paper, which is checks, okay? Thank you, industry, for moving past that. I would call it an industry failure between 2050 and 2030 if what we've ended off with is still largely cash, okay? What we want to get to is either card or electronic, all right? Tackling cash. That's what we want to see, the cash pie shrink. That's what we want to get to. Of course, and this is a delicate one, but I'll share it. Our preference as the SARB is to also see greater forms of, I'll just say, electronic or faster payment systems. Of course, we're very dependent on card in terms of non-South African providers. And I think given geopolitical tensions, we have to watch this space quite carefully. So what's the red dot? All right, the red dot keeps us focused as the payments ecosystem modernization program. There's lots of things that we're going to do. I'll share that. But the bottom line is, we say to the team over and over and over again, whatever we do must be in service of the red dot. It's the adoption and usage of fast, simple, affordable, secure digital payments. Okay? That is our focus. I say to them, and I mean it modestly, okay, when we bump into governor in the passage, they'll say, what am I going to hold you guys accountable for in 3 years? Well, hopefully longer, 4 or 5 years. And this is what he's going to hold us accountable to. Okay, have we met this particular goal? So these are the 3 reasons that we're doing the PEM. The first one is that in economic terms, we'll say, we want to move to a higher elevated equilibrium. The payment system is at a particular equilibrium, big 5 right now. Pretty stable, runs and all the other good things. But we want added competition, added innovation, added efficiency. If you think of my example of the utility of the electricity, we want it cheaper, we want it faster, we want it affordable, we want it accessible to all, okay? And that's the first reason. We say to them, governors, we want to elevate the equilibrium, all right? If you've heard this many times before, if the tide rises, all the boats rise, okay? That's what we want. The second thing, the second reason is, we want middle mile infrastructure that serves as a public good, okay? Financial market infrastructure that serves as a public good, all right? And therefore, we want that middle mile infrastructure enhanced, all right? It must be a capability that serves the first goal. And the third one, I've spoken to already. We want to make sure that we achieve the red dot. Those are the 3 reasons, crystal clear, all right? So I'm going to skip this one because I've covered reason 1, except to point out, just take a look at the data from PIX. All right, 29.2 billion transactions just in 2022, all right? And they were largely cash dependent. They didn't, card was there, but not as prominent as you see elsewhere, okay? And the tagline there is that the central bank took the lead. It's not always a success story. I've seen it across many other jurisdictions. Central bank can take the lead like in Mexico, like in Europe for tips, and you might not get the success. Here, the central bank's taken the lead like in India as well, and you will see success. All right? Now, this is my punchline slide. What do we want changed in order to get to that elevated equilibrium? There are 9 particular building blocks that we think of. And I'm going to try and be catchy and say, we want, right? These are the 9 things that we desire and want as the central bank. And I think many of you are familiar with the diagram. For those who are not, 2 banks on either side, someone that you bank with and someone that, let's say, a merchant banks with. And then, of course, Arif at the bottom end as a payer, and let's say Megan on this side as a merchant, okay? And, you know, we want this system to be updated, upgraded with the following 9 things. The first thing we want is the ability for a non-bank to hold a store of value, okay? In other jurisdictions, they will issue e-money, okay? And you do not need to partner with the bank, but you can hold a store of value on your own. South Africa, based on a 2009 paper that the SARB put out, if you're a non-bank, you have to partner with the bank. And we've seen that the likes of M-Pesa and so on, hasn't really taken off well here, and we think it's because of the business model. So that's one. Second one is we want competition on the acquiring or acceptance side, not just for card, but for any other payment system, all right? And you've seen in the South African landscape, people, non-banks who have come in, who have shaken up that space. We've gone, and I remember this data, we've gone from about 300 or 400,000 point of sale terminals way back when, 2010, 2012, and so on. And that number, anecdotally, has increased 3-fold, 4-fold to date, all right? You walk around and you'll see mobile point of sale terminals in smaller stores. So we want that to be the case. The third one is, of course, you want instruments to be issued by the folks who play in that domain. Could be cards, could be apps, okay, and so on. In some jurisdictions, you will see super apps that come there. The fourth one, of course, is that you want for these stores of value to not end up being walled gardens, closed loop schemes, like you see in China, okay, with Alipay and WeChat Pay, or in M-Pesa in Kenya. We want it to be interoperable, all right? The fifth one, and I think someone mentioned it, is that we want to be able to standardize technology like QR, right? You don't want to pitch at a point of sale terminal, and in India, I couldn't believe the number, 13 million QR codes, 13 million QR codes. That sounds nuts, but it's true, all right? We're standardizing on that. The sixth one is important. I could spend an entire day talking about it. We are going to create a digital financial ID. And this means a digital financial ID for everyone in South Africa, including those who are undocumented. Okay, we're in deep negotiation with some of the players on the government side on that. All right. The seventh one, of course, is that you want the ability to do payments just by knowing someone's mobile number, or the ability to do a request to pay, like in through PayShap. The eighth one I could spend a lot of time on, but I'm not. We're going to build a pre-funded settlement function, and that's going to give effect to the ability to do clearing and settlement in real time. And then, of course, the ninth one is important. We're going to think about the economics, like interchange, for all of these payment systems. So this just gives you a feel for the type of things that the PEM program are thinking about, all right? Many of you would have seen that the NPS bill is in progress. These are just activities, 14 activities that the NPS bill will kind of talk through. It's still work in progress, but the essence of it is that we're going to move from an entity-based regulatory framework to an activity-based regulatory framework. Now, here comes my other punchline. If you think of the requirements that need to be fulfilled if you play in these activities, whether it's managing risk, making sure you have fit and proper requirements, making sure there's prudential and capital requirements, making sure that there's disclosure of charges, making sure there's accounting and audit, and so on and so on. This is not a free ticket into the game, all right? Payments is a serious business. That's why I start off with the RTGS and the values. The SARB will not be irresponsible. We will not just let anyone into the game. You want to play? The mantra for us is same activity, same risk, same rules, all right? What we do want to do is be proportionate to the risk. Megan reminds us about that daily. How do we make sure that the activities are proportionate to the risk? Again, I could spend a whole range of time on this. I'm not. This is just, I didn't mean to put it in, but it's just to give you a sense of initial capital requirements and ongoing capital requirements that might be required for some of those activities. I've covered the middle mile piece. Of course, we want centralized fraud capability. We want DFID and so on. I could spend a lot of time on digital ID, but my punchline here is that if you think of the way that you identify yourself for a payment transaction today, usually it's something that you hold and something that you know, like a card and a PIN, all right? Imagine the ability of using your biometric, using your name, your surname, your address in digitized form, and that you can make that available to any provider, and that you hold it as a customer. We will make this happen like we've seen it in other countries, all right? And then I've talked about a cash-smart society. We're not going to get rid of cash. It's going to hopefully decline. I said amen to your prayer earlier on. And then, my last 2 points would be, we're very committed to this as the SARB, all right? The extent of the commitment is that inside the SARB, we have something called strategic focus areas, and usually the governor puts out 5 that we jointly create. This next 5 years, we've got 3, right? From our constitutional mandate, it's price stability, linked to that financial stability, and guess what the third one is? Payments, okay? He's going to hold us accountable to make this dream happen. This is the wagon wheel. So when you look at it now, it'll make sense. Inside the middle core is the public digital payment infrastructure. That's why we have shares in BankServe. On the outside of it is governance. We've got to make sure that we're clear about how decision-making happens. We've got to be clear about our role as regulator versus our role in the digital public infrastructure. We've got to make sure that our risk policy, legal, and regulatory construct aligns with what we're trying to achieve. And then there are the 7 initiatives, the what's that we often tell the governors. It's foundational enablers like digital financial ID. It's, my eyesight's bad. It's of course, enhancing the faster payment system, PayShap, interoperability I've spoken through, fraud and intelligence, accessible stores of value, modernizing the RTGS, both locally and in our context for the region in SADC, and of course, underpinning this education and awareness. I hope that's given you a good sense of why we're doing the PEM, what we're doing, and potentially from the dialogue, the role, the key role that you're going to play as stakeholders. My parting shot would be, it's never been such an exciting and energizing time to be in payments. I think that the folks in this room and elsewhere over the next 10 years can leave a legacy for South Africa. We must bring the payments electricity to all.
Thank you so much, Arif. I don't want you to leave the stage because, boy, after that fantastic presentation, we've got a lot of questions for you. But not just for yourself. I'll take the opportunity to allow you to have a seat right here in this particular chair behind me, sir, because I do believe that this is where the conversation gets exciting, right? Many of us getting a lot more clarity in terms of the dynamics, the ecosystem, and of course, awareness that we have to have as to how the South African Reserve Bank is positioned. But what's our role? How are we prepared? What strategic plans and frameworks have been put in place by key institutions like FNB and RMB? And what does it mean for us as stakeholders in the room who will be participating in this future in South Africa, where ultimately we move from the big 5 to the red dot, as the target has been mentioned. So this is where we're going to move to an intriguing part of today's panel and program, which is our panel discussion. I'm going to introduce all of our speakers up on stage, mentioning their names as well as their full titles. They'll make their way up onto stage at the same time. And of course, I'd like you to introduce them with a wonderful applause. Bear in mind, this panel discussion is not for me alone. It's for all of us. So there will be an opportunity for us to actually address certain questions, areas of clarity, maybe even concern, but most importantly, collaboration that will afford you to address to the panelists as they join us on stage. As mentioned earlier, very familiar faces to many of you here in the room who are present. So as mentioned, Mr. Ishmael continues to join us on the panel discussion to provide a lot more clarity and detail on the back of the keynote that he's addressed. He'll be followed by Lauren Brietska, Group Legal Head for Payments at First Rand Bank Limited, followed by Gordon Little, Head of Payment Platform for First Rand Bank, Mpho Mofokeng, Head of Transact for Trade and Treasury Solutions at RMB, and will be joined on stage by Ravi Shunmugan, Chief Executive Officer for EFT Product House at FNB Commercial. Please give them all a warm round of applause. Thank you so much. I think after that presentation, shall we just leave it to Ravi, Arif, to continue with further questions?
I agree.
That feels like a setup.
Not quite. But I must tell you, Arif, you've actually set the platform so beautifully for us to understand where we are in South Africa's landscape. And for many of you who are here in the room, I'm assuming some of you have been privy to this information. For some of us, it might be new information, but most importantly, it does help us understand where we are in terms of the navigation of this particular journey. And I think it's imperative for us to, continue with just opening remarks and some thoughts from many of you as key leaders within your respective spaces. The wealth of experience that is on this panel when it comes to payments is something that should not be undermined. It's remarkable and I think plays a critical role in the direction that we headed towards. And Arif, I think just to build up on what you have highlighted, perhaps just continue to start off with you, and perhaps if I can shift this as well then to Lauren, when we do take a look at the status quo that you've given us today, as has been mentioned, lots of evolution that has transpired in terms of the payment space. And I think it's imperative for us just to get a better understanding of how we fare against our international counterparts. Because so often when we consider our banking environment, there are a few examples you alluded to, Brazil, Mexico, and others, but it is critical for us to understand where are we in terms of that particular landscape and how it is that we're continuing to shift that trajectory. I'll start with yourself, Arif, and Lauren, get your thoughts.
So this might be harsh and not harsh at the same time, and I'll make sense of that. So I think South Africa, in the language of Thabo Mbeki, certainly has two economies, right? And when you look at the kind of, and I'm privileged, when I look at the type of payment systems that I engage with in South Africa, coming from the US, I mean, it's such a pleasure to be able to send an EFT credit, click, 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 and it's done.
Yep.
My God, I try to pay someone using a push payment in the States, I got to do a wire transfer. There's no EFT credits. It's, they do have a clearinghouse, but my goodness, it's not so easy, right? So when I think of that, unharsh, all right, I think South Africa compares very well, right? We have payment systems like early debit orders and so on. Others would dream of. They haven't conceptualized these things. But then I come to the second economy, all right? And I say, I'm going to be harsh, all right? There's far too much dependency on cash. And I think when we look at our peers like Brazil, like Mexico, like Singapore, like Thailand, and so on, what you do want is the ability for others to make simple, fast, affordable payments, right? Especially in the jurisdictions that they're in. And let me not be vague, okay? I think of folks who, I have friends in Soweto, in Umlazi, and so on. The ability to just make payments at the point of presence and not return to cash is missing, okay? So there I'll say we don't compare well.
100%. And I think it's really imperative that you've highlighted this because it does provide a great segue for you, Lauren, given that you do take a look at the regulatory landscape. A payments lawyer, as I've been told. And this is critical just for us to understand how it is that we open up the ecosystem, compare competitively, but still keep in mind the frameworks that we need to operate in.
Absolutely. We joke, I'm a payments lawyer, and for years people ask me, what is payments law? It's not something you learn about in a textbook. It's something you live every single day. It's understanding the technology behind it. It's understanding the various ecosystems that it depends on, the interconnectedness between not only each other, banks, fintechs, our regulators, our consumers at the end of the day. It is such a complex system. And I mean, South Africa has a world-class constitution, and our payments legislation shouldn't be any different. The nature of payments is complex. It's fast-paced. It's changing every single day. Our fraudsters are getting more sophisticated. So this idea of evolution is not foreign to payments. It's what we've been doing for decades. If you think of how we come together as an industry, we're always looking to see how we can do things better. The concept of if it's not broken, let's not fix it. doesn't apply to payments. We are
Yeah.
always constantly looking to see how we can do things better, provide better services to our customers in a more efficient way. And we need regulation to help us, empower us to do things better. Arif's joking about flipping the switch. I don't have a nephew, but I have a husband who likes to dabble with the electricity in our house. And I just think, oh, if we flip the switches, you're going to short circuit the whole house and blow up the whole house. So I see it from a legal and regulatory perspective is we need to have a foundation, good governance that is transparent, that's easily understood by all, so we have that legal certainty. There's no vagueness, there's no ambiguity, and it stacks up to a global community. We're setting ourselves up to be a global payment system, and our regulation needs to enable that. South Africa, we have fantastic use cases that show our adaptability, our resilience to change.
Yeah.
PaySharp is one of them. ISO 20022 adoption. A couple of my friends in the room, we were talking about DebiCheck and the journey we've gone on for that.
Right.
And the collaboration that it took, to set that up and make it work for everyone. And getting the various perspectives from everyone, just helps us make a lot more value out of what we're doing.
Got you.
And I think that's also what our regulation's trying to achieve. In the last 3 months, we have, and we've all been joking about this, an influx of regulation to comment on. We've had the interoperability paper, climate change. We've had cloud computing and offshoring of data. We've had draft licensing and authorization frameworks, exemption to the Banks Act in terms of allowing deposit taking by non-banks. Now, the fact that we have a consultation period with our regulators to give our inputs, we're reaching a broad spectrum of stakeholders that each bring their unique value and perspective to shape our regulation to make sure that it is that world class and is still fit for form. And most importantly for me is that it is effective regulation.
Yeah.
If we're not enforcing it, we're not monitoring, and it's not effective, it doesn't achieve what we're trying to achieve. And I think that's the common goal with everyone
100%.
sitting here today.
The regulation is shifting. We're all actively participating and engaging in it, and of course, making sure that we are pulling at all levers to enhance the level of participation. Speaking of that, Gordon, I think this also provides us with a great opportunity to emphasize how not only is payments important to the economy, to the SARB, but it's also important to institutions like yours, given your recent appointment in your current role. And maybe let's just underscore this, because it does help us understand how it is that we're speaking to the two economies that exist in South Africa.
Yeah. So interesting, you talked about the RTGS introduction. So I was involved over 30 years ago when we put in SAMOS and had to fly to the central bank to get up, because then you had the security key was on a card.
Right.
So we flew up to collect them. So I've been involved in payments for 30 years. As my wife said, Gordy, you've done really well. You've gone from payments to payments. So a lot's changed. But it's been great to take on a role at a group level at First Rand. And I was appointed kind of in early Feb. We were talking about impending change in legislation. I've been in the seat about 4 weeks. And I mean, all of the stuff we talked about arrived kind of day after day after day. And I think we've seen real momentum in that space. I think the big takeout for us when you look at these two economies is there's 30 years of investment in real-time gross settlement. There's been massive evolution in that space. Financial inclusion, and we've had our own adventures in that space, has been, I would guess, a little bit of a kind of dark mark that we want to make sure we erase going forward. Because the challenge of inclusion has been that as banks, there are places that we can't go because regulation doesn't always let us walk through every door and bank every citizen that's sitting inside the country. So we're very excited about kind of seeing those barriers, if you like, diluted and diminished in terms of solving for how do we reach those communities, those people, and those areas where we haven't been able to get to before. The other exciting thing for me is, and ever since I've worked with Ravi, we've been talking about interoperable QR. I mean, it's having a single QR that's mass adopted, I think just empowers so many more people to quickly be able to provide tool sets that are instantly more inclusive. And QR alone is not the magic recipe, but interoperability and the collaboration between partners, which is, I guess, what all the regulations about, is what excites us.
Got you.
And as a group, we'd love to be playing and partnering in kind of all aspects of change. It's just that it's immense.
Yes.
There's just so much to do.
And I think that's an important point, right? Because for many of us, we might think, okay, well, it's quite clear the SARB is evening the playing field for banks and non-banks. A lot of people might anticipate that this would make you anxious as a banking institution. But if anything's been clear so far through this conversation is that partnership and camaraderie is what's required. And the truth is there's opportunity for everyone to participate.
Yeah.
I'm not sure if we do have any fintech participants in the room, but maybe this is a great opportunity for us to just to underscore and understand, you know, how it is that First Rand as an institution does allow for that partnership, but also welcomes competition in the industry.
Yeah. Maybe if I could just make two additional comments. I think from the First Rand perspective, I guess we've been deeply involved. So Megan Brown is on secondment into the PEM program at the central bank. And I think if you walk around the industry groupings, you're always going to find an FNB or an RMB participant that's trying to kind of, if you like, coordinate and kind of provide input. So for us, we wear two hats often. There's a commercial hat that we must wear as kind of employees, but I think, you know, we are very passionate about solving for the SA Inc. Challenge. I think if you ask Ravi about how many initiatives he's been involved in over the last decade, I mean, all of the things that have been mentioned today, we've had a hand in trying to make those things work.
Got you. And I think that's important for us to understand and, of course, engage on, because this is where we are looking to adapt and create those solutions that we're trying to move forward with. Mpo and Ravi, I guess before we do come back to the intricacies as to where we are, how we're shifting, and what models and participation we're seeing, you also sit at the forefront of many individuals here in the room. Clients who call you and need your assistance and your guidance, and you provide these solutions for them. And I think it is, you know, top of mind for us just to understand, you know, how, again, not only the bank, but industry is evolving to meet some of those needs. I asked earlier about some of their typical challenges. We were still shy, but maybe in a moment we'll hear some of that feedback so that we understand, you know, how you are building on the capabilities to address those needs. Ravi, let's start with you. And
Yeah, Gugu, thanks. I guess for us, investment in payments technology and infrastructure is not a new topic. I guess, you know, we've been investing in payments infrastructure for decades now and longer than that, both internally in the bank as well as in the industry. I mean, First Rand has been one of the founding members of a lot of these payment instruments like RTC. We were first to market on PayShop. But what I just want to underscore, I guess, just to understand where the SARB is going and the pivot that they're making from a regulatory perspective, I just want to call out 2 points. I mean, we've invested lots of money into our card infrastructure. We're in the process of quite a lengthy period of investment in card issuing and acquiring infrastructure, and that's in play. We've invested in our billing technology. I guess just 2 call-out points. On the 13th of March 2023, when PayShop went live, we didn't waste an opportunity. I think what we did then is we invested in excess of about 250 million in our core infrastructure to take it off, as Arif mentioned, off mainframe onto modern technology. And what that allows us to do is to actually embrace the pivot that's being made by the SARB. And I guess to all the fintechs and the partners in the room, it allows us the ability to give flexible solutions to those fintechs as partners, and then to customers, to follow our customers on the journey that they want to go on. Gordon, obviously, in his role, going forward, we're going to be making even bigger investments. I guess you probably would have heard the announcement that we made into the investment of our core banking technology. You know, we partnered with Fiserv and Finxact, and that announcement has gone out. There'll also be another exciting announcement that's going to come. We're also going to be partnering in terms of upgrading our core payments infrastructure. And over the next 5 years, that's probably going to be north of about 500 million, right? So we're really embracing and we're readying ourselves to really enable this pivot that the SARB has made. We've got lots of infrastructure investment in card. Card is obviously, you know, quite stable technology, and it's there. But we're now embracing this pivot, and it's going to allow us to follow our customers, not just in South Africa, but into the continent and abroad. And it's going to help us enable partners, because like you said, you know, we're going to need partners to do this. It's not just about the payment technology or the core payment. Like if you're going to roll out QR, you must just bear in mind, I mean, there's a lot of stuff there that we talk about proxies. Those are all new stuff.
Yes.
You got to get the customer education going. You got to get the awareness going. You got to get people to embrace the stuff. That's where partners come on board. That's where fintechs can help us, because that's the part of the market that they could, you know, get into. So we're really readying ourselves from a core infrastructure point of view. And as you would have seen, FirstRand is not new to this, right? I mean, like today, you can go into your app, not just in core payments, but also in our channels, right? You can go in the app, do your e-wallet payment, you can do a bill payment. We've been at the forefront of payments innovation. So this is not new to us. I guess we're readying ourselves for the next pivot that's coming, and we're going to embrace it. And whoever wants to partner with us, you're more than welcome. Within reason and obviously regulatory frameworks. All of those good things.
Within reason. Got you. Thanks so much, Robbie.
Yeah.
Got you.
Thanks.
Mpho?
Awesome. I think a very important statement that Arif made earlier around the evolution that's happening is that in the current form, our clients or fintechs process payments through us because they have to. It's regulated as such. This pivot makes it an optional partnership, and we want to be able to offer value propositions that make fintechs want to partner with us in the payment processing stream. So in that, we're evolving how we then show up, the solutions we then offer to our potential partners and clients, such that if they're also willing to take on this licensing and process directly with the SARB, we remain relevant by supporting them in that journey. Our investment in technology is also dovetailed in our investment in skills and understanding what it means to comply with these regulations, and we're open to sharing those learnings and helping our clients on their journeys should they want to do that. But equally, we're also full participants in payments, and so our value proposition to those potential clients must still remain relevant. We must use the new infrastructures and technologies to make sure we've got robust solutions so that when they do stay with us, it's because they want to.
100%. I think what's clear is that the partnerships are there, and of course the opportunity to continue engaging is critical and has been highlighted. But I am quite keen just to see if there are any fintechs in the room. If you could just raise your hand so that we understand some of the thoughts that will be coming about. Fantastic. You're noted and you're acknowledged, and it would be great to pick your brains a little bit later throughout the course of the session just to hear your thoughts. And I ask this because this is where we want to shift gears, right? Ultimately, what we're well aware of is that, yes, the landscape is open, competition is invited, but also collaboration. But where are we and what does that look like? And maybe, Arif, this is an appropriate time to come back to you just to reflect on the framework and guidelines that was released by the SARB back in 2018, just reflecting on Vision 2025 in terms of the movement and direction and adoption of democratizing, of course, increased levels of payments. And there are several metrics and pillars that you pulled at and mentioned even in your presentation here today. I'm quite keen to understand, from a fintech point of view, the partners in the room and even those outside in the broader part of the ecosystem, given the regulatory aspects that they had to tick off, have we seen, you know, a heightened level of interest in SAMOS, in applying for parts of the regulatory licensing and compliance that they need to come on board with to actively participate, especially when it comes to the movement of high value and high volume flows? What are we seeing there? What's the uptake been like? Has there been engagement?
Yep, I would say that, and hopefully this is true, right? I've been out of the domain for a little while, but what's impressed me is when I've returned, and I think of the journey early on fintech at the SARB, right? Initially, we didn't even know how to define the particular landscape. But I put it to you that from about 2016 to now, the fintech landscape has evolved radically. And not just payments. I know we're focusing on payments now, but the fintech landscape has evolved absolutely radically. If I contrast that with other places in the world, I think it's fairly comparable. And I'm probably going to get into trouble for saying this, but what has limited participation in the payments domain, and although there's been really active participation in various places in the value chain, I think is the regulatory framework. So I'm hopeful that as the regulatory framework now evolves, and again, I think I made the point that, you know, it's not a free ticket into the game, that we will see competition. But what I'm encouraged by is that this competition will not just come from the fintechs. I'm really impressed by the language of the panel, of course, from an RMB, FRB perspective. Okay, and the ability to shake up the domain and see the tide rise is what excites me. I'll pick out maybe one piece of innovation in the fintech domain that I think is certainly a game changer as we go forward. Now everyone's holding their breath.
Yes.
And for that, I'm going to turn to Ravi. No, I'm messing around. All right. I've been thinking about this quite carefully because someone had planted the thought saying, actually, we want to challenge you, that we don't think that the stores of value is where the innovation would actually come from. Potentially some innovation, but the heart of the innovation is payment initiation. And then I turned to India and was taking a good look at the payment initiation service providers there, like Google Pay and WhatsApp Pay and so on. They don't hold the store of value. Okay, that's not their game. But the ability to provide access, simple access, whether it's through USSD or some other technology, Ravi could say more about that, but that's a key piece of innovation that I think we need to think about a bit more in the South African payments regulatory framework. I'll pause there. Yeah, thank you.
Perfect. And I think that's important for us to actually also build up on, just in terms of how we make that progress and how we develop going forward. And maybe, as you highlight, not only understanding the role and function of the payment platforms in terms of store value, but what it is that clients and customers also want. I'm also cognizant of the fact that we speak into a room of individuals who are leading corporates and big businesses, and of course significantly witness high levels of value in terms of the transactions and settlements that they participate in. And perhaps in part, this is where you can also give us some insight into that shift and meeting their needs where they are.
Yeah, so I think a very important part of, I suppose, embracing the change is also looking under our relative hoods and identifying where we are really good at in this value chain and where we've got gaps and lags. That's where we open up for partnership opportunities, because the strength of the ecosystem relies on us playing to our strengths. So we've equally done that.
Are there partnerships you can allude to now that might already exist or have developed over the years?
No, absolutely. So we've recently partnered with Figment, which is also a switch provider in industry. We also have partnered with PaySpace, which is a payroll service provider. They offer the payroll management capability. We then augment that with the payment facilitation. And there are multiple of such things, again, on the backdrop of us looking deeply and clearly on where we feel we've got the right to win, and who do we then partner with to add that end-to-end value to our joint clients.
And we also need to, Gordon, do you want to add on to that?
Because there's always this illusion that, we don't partner well, okay? And I guess, look, I've worked with a number of our partners. I'm going to avoid their eyes, but I mean, we don't. It's for a partnership to work. There's got to be kind of genuine mutual benefit.
Yeah.
And I think we found some really great ways to kind of engage differently, to make sure that actually we end up solving for client need ultimately, and partner need. And then I think the other thing that's going to have to be solved for going forward is, large clients and fintechs understand the concept of trust. So that's how partnerships work. But for in solving for inclusivity, is trust needs to be the commodity of how those payments are seen and work.
Yes.
So again, when you look at what's happened in India and Brazil, it's that certainty that the money is with you that actually kind of really closes the loop. So I think partnership really important, and then kind of solving for adoption is going to be the other thing that I think the partners in the room are going to help us a lot with.
I think trust is also an aspect that you touch on there, which is so important, because it also speaks to individuals and businesses in the room who also work right across our borders, north of our borders. And we don't need to tell you about some of the stresses and frustrations that typically come through with that. I'm keen for you to build up on that, Gordon. But Lauren, also to get your thoughts from a regulatory point of view in terms of participation with our peers across the continent.
I think, and again, we like remittance provision.
Yes.
Again, also a big target area, also a focus for the G20. And a lot of it comes down to, it's got to be about ease of movement. Also, there's a lot of innovation we've seen from some of our clients who've actually built connectivity to wallet endpoints across the continent. And again, the swift movement of cash, let's call it gentle removal of some of the exchange control frictions, of elements that, if we can resolve some of that, then you get rid of that need to hand money off to someone who's driving or visiting to carry cash. And you can move it across. And the cost in that space, is something that I think all of us want reduced so that there's broader adoption. If it's cheaper to send money in cash with a driver, then you know that industry and fintechs have got a bit of work to do.
Remittances are one thing. What about big business and some of their frustrations? And maybe this is also an aspect you can build on, Ravi.
I think, Ravi's the guy that faces big business. Off you go.
No, look, I think what's quite important for us is that whatever we investing in now from an architecture and a payment system perspective needs to be flexible enough to meet a big business use case, but also meet a small business as well as the very entry level point of view. And I think we've got a view in terms of where our gaps are. As Impo has said, across that payments value chain, I mean, we've been as banks very good at authorize, clear, settle. And that money movement, I don't think you can fault us. I think where we've really have to think about partnership is in that prepayment, payment initiation, and in that post-payment space. So I think in those spaces, we are very clear that we might not be strong in those spaces. And that's where partnership comes on, right? And to Arif's point, how do we partner to allow initiation of payment to be slicker, quicker, and how we then enable, we spoke about trust earlier on. Trust is quite important because in that pre and in that post payment, I must be able to know who I'm paying, that person I'm paying is that person I need to pay, and that the money lands in the account, which is the post payment and the recon and those kind of things. And remember, one of the things I was talking to Andrew earlier on, and one of the frustration points he's also highlighted was that it takes so long to do dev and to get things to market. And that trust issue is quite an important one because as we start to move into real-time payments, you're moving payments and value sub 10 seconds. Now, I was about to tell Andrew that maybe he must go out there and go recruit all those developers from the fraudsters because they are amazing from a development point of view because they're one step ahead of everyone. And and it's amazing. You find a loophole in the payment system, they're in there and they run up those balances like you wouldn't believe. So what's quite important for us is that we have to go about this thing fairly, not slowly, but move at a pace that we can make sure, because as we're moving into real time, the money movements are sub 10 seconds today. In PayShop today, if I move money to you using your cell phone number, the money's in your account cleared. You have access to it within 10 seconds. Now that for us is quite scary because as bankers, we're good at risk management, but that kind of movement of money is phenomenal. So I think it's in those spaces that we really need to partner well. The banks, inherent in themselves are managers of risk and value transfer. And I guess, the fintechs out there and the partners out there can bring lots of innovation into that space to help us try and manage it.
Got you. Paul, you wanted to say something before Lauren?
No, Lauren, go ahead.
From my perspective, the concept of partnerships is so important. When legal comes in, we have a very difficult job. We have to find a very sensitive balance between what we want to try and achieve and what is right. And, we talk about this concept of responsible innovation, which opens up your mind to thinking there's something that is called irresponsible innovation. And that's when innovation can go so far that you actually compromise the system, where you are introducing risk that maybe wasn't intended, but has now compromised the system and compromised the trust. At the forefront, and has been very well said by my colleagues, is that our customers expect us to do the right thing. They are trusting us to do the right thing. When they flip the switch, they should be able to rely on us to have done the right thing. And that partnership to achieve that balance, we saw it firsthand, a lot of you in the room who I've worked with closely on Baby Check, trying to solve debit order abuse and trying to find a balance between the consumers who are victims, but also the ultimate creditors who are also suffering, and finding that balance and how we come together to make sure we're doing the right thing for the industry.
100%.
There's a number of ways that we try to achieve this, and there's 4 that stand out in my mind. So first of all, regulatory sandboxes, fantastic initiative where we can test this innovation. test our limits, see what we can do, limiting our exposure as well, working with our regulators, discussing and getting, again, the broad perspective from our various stakeholders. We talk about phased rollouts, which is very important. I love phased rollouts. PaySharp is a good example of how we had various cohorts that allows us to stagger how we're doing things. The saying of also throwing the baby out with the bathwater is we don't want to over-regulate something.
Yeah.
Let's not try and solve for everything all at once. We want our legislation to be enabling. We want it to empower us. We need to future-proof things for challenges that we can't even imagine yet. This is why our point of having regulation that is technology agnostic is so important. Technology is changing faster than we can think. Yes, Europe does still send checks by post. All of you are like, what is post? I know. But this is the point. We need to think about those things in partnership with one another. So regulatory sandboxes, phased implementation, collaborative forums, industry forums, working groups, critical. I spoke to Peter earlier about a decade ago where we had DebiCheck, and we were all workshopping how we were going to solve for debit order abuse. And it was a room full of people, technical, legal, business, solving together. There was no need to vote on certain things. We all had consensus that we were trying to achieve a single goal.
100%. And I think that's important. So the goal is quite clear. We are very clear on what some of the challenges are, but of course also the opportunities for camaraderie and partnership. And I'm hoping, Arif, that the phased approach and some of the recommendations that have been made by Lauren and the panel here have also been heard and understood by the regulator to consider as we move forward. But I've kept you to myself for too long. And as we know, we've got a room of critical stakeholders in here who have burning questions, burning concepts, and clarity that they also would like to share, and maybe even some of their thoughts. So we do have a roving mic available. Your hand has been noted, sir, definitely. It popped up immediately. For the benefit of everyone in the room and those watching online, please introduce yourself, your name and the company you are representing. Feel free to keep your question fairly brief, and if it's directed to one person, do so. We are doing our best to make sure that we can get to as many questions as possible so that everybody has a better understanding.
Right. So I'm Gerard van Wyk. I'm the CEO of Softicomp, a fintech. I want to just make a point. Arif, you spoke about providing simple access. I like that. Critical part for me would be the DFID and how we can bring people in there. And I think Gordon then spoke about solving for adoption. I totally agree with you, because if we can sort out the simple access with a DFID, then obviously we'll have simple adoption. The critical part that I'm looking for, and Arif, I'm looking at your PEM, is to say, how do I bring QR code standardization and barcode standardization together like they've done in India? I want to see how they do that. I mean, if you look at your time bank card, you've got a barcode at the back, and then tying that into faster payments. And as SIBA, and our Peter is here, our chairperson as well, some of the work we're doing at the moment around faster payments is looking at common terminology. And I want to say to the banks, some of the problems we see is Capitec has got a certain, saying my value for faster payments is 500, another bank says 3,000. Start looking at a common terminology. And I think, Ravi, you were mentioning about the initiation of payments, and I agree with you. The problem is that some of the things we see is home affairs being sometimes done when we do biometrics. So I think, all the terminology. And then I think, Lauren, you mentioned about phased rollouts. I absolutely agree with you on that, because the critical part is regulatory sandboxes. And once again, we're looking at SARB and saying, guys, how do we put together, as we're happy as fintechs to participate and say, listen, let's look at being a collaborative industry to actually say, guys, get this stuff done quicker. Technology is easy. I always say technology is the easy part, right? Because we can do it. But the critical part is, let's sit around the table and say, how do we actually get it done?
Fantastic. Gert, I'm keen to offer you my seat on this stage. You've touched on so many critical points, and it really brings it back to the practicalities. Perhaps, Afri, let's get your response and feedback.
I'm happy,
if there's another question, please raise your hand. The mic will come to you.
I'm happy to give it a go. I think you're raising really, really substantive practical points. And I'm going to work backwards. So latching on to what Lauren was saying about the ability to have a toolbox that allows us to pick the right mechanism and be flexible and be fast and fail fast, learn fast is pivotal. Let me not be diplomatic, but practical. Part of the PIM has a construct that we would call pilots and MVPs, minimum viable products. We can't do that as the SARB on our own. We have to partner with the banks, with the fintechs, and so on. Part of the program is making sure that each of the work streams that we've got, and you touched on a number of them, end off with minimum viable products that we can test with you, right? And I'm going to pick the two that you touched on. In fact, three, but let's keep it at two. So on digital financial ID, we've got industry work groups going right now. We're going to co-design, but the spirit of doing this isn't to design at death, as Lauren was saying, and then let's make it absolutely perfect and land it. The bottom line is there's a whole string of things that we need to think about, including the business case for banks and non-banks and so on. But I keep pleading with the team that if you can find the use cases, to your point, Mpo, where you would want that, you would desire it, you want it fast, okay, and we can test and learn from that, perfect. On QR, I forget the terminology, Megan, but they've expanded the terminology to make it beyond QR. So the good news is, as you pointed out, it's not just QR as a form factor. It includes barcode, NFC, USSD, amen.
Got you. Anyone else open to respond to Gert's comments? Gordon?
No, look, I think you touch on a lot of issues. The thing that I'd love to be able to look back on a year from now is like if we could just create some cadence. So there's lots of engagement, but it'd be good to kind of be able to show real things a year forward. So I think that ability to move from kind of thinking, designing to actually making it work. I mean, that's how I think I'm going to get judged from a first-rand perspective, like what's actually different. But so it's that excitement there. And then I think some of your views on kind of sandboxing, working together, I mean, that's where the bank is going to have to respond much more creatively than we did in the past.
100% cohesiveness going forward. Any other questions? More than happy to take a few in the room. Your hand has been noted, sir. If there are any others, your hand has been noted, sir. Ma'am, we'll come to you too.
Morning. Can you hear me? Name is Gabriel Rue, and I represent Stratec, a fintech solutions company. So just with that in mind, I think most of us in the space that's in my kind of obviously space of the ecosystem has probably read the MPS directives, coming out in March, around about there. And the immediate response you do is you first look at yourself and how does this impact me, right? And you kind of trip yourself up because there's a lot of detail, and then you just try to understand the spirit of obviously what is trying to be communicated. And now with that in mind, and I suppose you had your 9 points there, where number 1 and number 4 you spoke about non-banks and store of value, and then number 4 you spoke about no walled gardens and closed loops. Now, just with all those comments in mind, the swear word sometimes in the banking fraternity is vouchers, right? And just how does that fit in? Because I don't see vouchers necessarily on any of your slides specifically.
Yeah.
And also, just what is your take on vouchers? And obviously, I suppose the end state or end game with regards to the PIM, and where does that fit in? Sorry, I hope that makes sense.
Yeah, it makes sense. It makes sense.
Thanks, Gabriel.
You happy if I respond, or you want to take a few more questions?
Keen to, well, we've got some time. We'll wrap up in about 5 minutes. So maybe if the mic can make its way quite speedily to the other end of the room, or will that take some time? Fantastic. Okay, there we go. And your hand has been noted in the front. Any other questions? We're happy to sneak in one more. Yours has been noted. Oh,
We got another
two.
one there.
Okay.
Okay.
We've got
And another one. Okay.
Thank you, Gugu, for the opportunity, and also to FNB and RMB, great initiative. I'm Peter Swanepoel from RealPay. Perhaps just 1 or 2 aspects. If I think about the impact of the changing regulatory environment, it very much speaks to the aspect of partnering and co-crafting that we need to achieve in industry. But what is important from our perspective is that there are certain models that are working well. If we think about the bank, non-bank, PSP, non-bank models around SOs, TPP, as an example, you get the benefit both of safety and security through the commercials, but you also have the opportunity to achieve innovation and reach into sectors or industries perhaps not traditionally covered by the banks. But in this changing regulatory framework, how do we balance the aspect of participation and not stifling participation by new rules, new requirements. Perhaps some thought on that, the aspect of bank, non-bank participation, collaboration, and potentially not over-regulating. Some thought from Arif and then the bank panel. Thank you.
Perfect. Thank you so much. We'll take your question, ma'am, then perhaps the next three. Your hand was noted. I'm seeing more hands as we go. Your hand noted, sir. We'll come to you. We'll squeeze it in. Fantastic. Ma'am, please keep your hand up just to make sure it's easier for my colleagues to spot you, and we'll take the three questions. But all comfortable just in terms of over-regulation, making sure that we avoid that.
Yeah.
Also understanding your thoughts on vouchers.
Sure.
That also came through from Gabriel as a question earlier on. Right this side, ma'am. There we go.
Sorry.
Whoops.
Hi. So one of my questions was related to the other one the gentleman just asked around. Sorry, let me introduce myself first. Devaki from representing Discovery Group. I wanted to ask around the participation of non-banks in the system, and in terms of how would that process look like going forward, in terms of are corporates going to be sponsored by their banks into the system, and how are banks adopting that whole idea around large corporates going directly into the system. And second question, just around the increase in faster payments and the risks associated with it. How is the regulator and banks actually working to make sure that you're protecting the corporate, you're protecting the consumer, in making sure that, you know, fraudsters are not ahead of the game, which they are at the moment, but how do we protect that going forward?
Fantastic. Thank you so much for your question. So if you could please keep your hand up just to make it easier for the mic to get to you, then we'll come back to the start there. We'll come here. We'll squeeze your question into at the same table. Fantastic. First question, perhaps let's respond to Ger's thoughts on closing the loop,
Yeah, on
fintech,
vouchers.
vouchers.
Yeah.
Vouchers is a key one.
I love vouchers. Now messing around. That's the right way to respond. I guess the diplomatic response would be, it depends, right?
Yeah.
So I've seen voucher systems that shocked my mind in the last 2 weeks. In fact, I wish I could share the example, but I'd get into trouble. And when I thought of how this particular fintech was using vouchers to help people at spaza shops digitize, and you know, they called it closed loop when they described it to me. But as I started to think about it, I was, my God, I never thought that you could use Edo in that way. Hint, hint, nudge, nudge. Okay, so I think the answer to vouchers is it depends. Okay, it must fulfill multiple policy objectives. So it could deepen inclusion, but we may trade off on interoperability. It may improve efficiency, but introduce other risks. And that, I think the regulator has to sit back and understand it use case at a time. That would be my response to that.
If I could, can I
Please,
add one?
yeah.
So I think we've seen, you know, vouchers and store of values have played interchangeably, if you like, over the years. And I'm with you. I think there's a place for each. I think there's also a different cost of origination for a voucher and running a store of values. I think the market's going to find a different equilibrium there. I don't think moving away from vouchers is the solution, though. I think store of value on its own won't solve for all of the potential use cases. And I think the voucher provider has done a great job of kind of, you know, solving for trust as well, because when you get a voucher, you know you have an entitlement. So I think they'll be with us for a long time.
100%. Maybe if we can get a response to the question regarding over-regulation from the gentleman from Oracle, and then tie in the concept as well of large corporates going into the market themselves, how the banks are looking to partner, and protection of fast payments.
Yeah.
Laura?
So maybe I can come in there. First of all, Gabriel, when I first read that framework, my first thing was, sure, this is long. But happy that you looked at it from that. Vouchers, yeah, not all the same. I think that is a key concept that we're picking up. The language that people are using isn't consistent. So when you say voucher, it's not the same as what someone else is using voucher. And that's becoming very apparent when we're looking at the regulation to make sure that we're all saying the same thing when it comes to activities. Voucher, in my mind, is more Consumer Protection Act versus your national payment system, as opposed to prepaid closed-loop solutions, where that monetary value is generally accepted across. And I think we're seeing that coming through from the registration of those closed loops in the direction.
Gotcha.
So I think that's a key point. I want to respond to the bank versus non-bank, if I can. I don't like that at all. It's not a non-bank versus bank conversation, and I think the fact that we're all in this room is evidence of that. We are all payments participants.
Yeah.
And for me, if we take anything out of that today, it's not bank versus non-bank. We are all having to abide by the same regulations, same activity, same risk. We're in this together. And it's important to navigate this journey together. The concept of sponsorship, as we know today, is changing, but it's not going away. So for those that want it, happy to still provide that service. For those that don't and want to, go on by themselves, also happy to navigate that journey. But from my reading and my understanding, it's certainly not a bank versus non-bank. We are all payments participants, and we're all trying to just make the most of it. Tackling that overregulation piece, my way is compliance by design. So when we are designing things, taking into account what the intention of the regulation is trying to achieve, helps us design our products. So when we're thinking of AML, KYC on wallets, store of values, building that into the design to make sure that we're still fit for purpose in terms of what we're trying to achieve is critical for me.
Got you. Ravi, perhaps if you can respond to the question regarding protection of managing fast payments and reflections of patient.
I think, maybe I wasn't clear when I said the fraudsters are getting ahead of us. Look, we've got lots of controls. Make no mistake. Real-time clearing today, the banks have got lots of controls. I guess when I was chairing the industry special purpose council for PaySharp, one of the key things that we kind of zeroed in right at the beginning was obviously fraud. And at that time, we got Megan to join forces with the SPC, and as an industry, we defined about 22 requirements that we needed in the industry to build additional controls. So make no mistake, we're taking the fraud piece very seriously. What we're seeing on the faster payments rail today is the MOs are not changing. So the MOs are not changing, but the manifestation of the fraud is coming onto the faster payment system rail because of the sub 10-second rule. So each of the banks have built robust controls, and I did hear the gentleman in the back. The reason why, and this comes back down to the point that Arif was making earlier on payment systems, the reason why banks in faster payments are toggling between the limits today is actually to manage that risk for their customers. Because we're not fully aware what are all the controls, and we're testing. So banks are toggling on limits, and that now comes down to the point of interoperability, parity, and those are balancing points that we need to get through. And as the banks work through that, and those 22 requirements land, I guess we'll have much more robust controls in the industry. And you can ask Gordon here, he was one, he'll tell you the story of what happened to him and
last week,
and the controls work, they're robust, they work. I think where we need to get to with faster payment systems is that we need to partner. Obviously, the more information you have, the better you are in terms of managing fraud. So that means that we're going to have to partner with all of the banks, the regulator, even the non-banks that are sitting in the system. You're sitting with information. If that information can come into a centralized place, which is where Arif and the team are running it, we can become a lot more quicker in responding to fraud MOs.
Gotcha.
And that's the way we're going to protect the system, because it's paramount. Because the minute you have one fraud, people will lose trust and credibility in the system, and you don't want that before scaling happens. Obviously, the other point is that I just want to raise, and comes back to vouchers. There are certain industries in South Africa that I wouldn't say problematic, that are probably we need to watch, on a watch list. And that's not for any other reason, and we all know what those industries are. I can mention them. They're online gaming, online gambling, crypto. Those are industries you've got to watch, because there's stuff that happens in those industries that's not transparent. And as long as we spoke about wallet accounts, as long as you've got wallets playing in that space, they're closed loop. I can't see. I don't have line of sight. So some of the controls we're looking to put in place is that if you want to fund your wallet, we need to do an ID number match, right, in the wallet. So that's a strong control. Today, you can fund your wallet however you want. There's a whole lot of vouchers that are floating in that space to fund stuff. And there's a lot of nefarious stuff happening in that space, right? So we really need those kind of industries, and we saw this, and Lazelle's in the crowd there, but we saw this happen with debit orders, right? We saw this thing happen. It was with specific industries that were playing in that space, and that tarnished the entire reputation of the industry. So my only call out is to say, you know what, we need to come together. These kind of topics is not a one-man show, it's not a banking show, it's not a regulator show. It's all of our responsibilities to
100% payments participants. We've got 2 minutes. I'm going to squeeze in those 2 questions because we are under pressure for time. But if you could go ahead, sir. And your hand was noted earlier on, so the mic is behind you, sir. To others, my apologies, but there will be an opportunity to engage with the panelists offline. Please keep it short and sharp, sir.
Yes, thank you. My name is Edson Korombi. I'm with MMK Insurance. The question that I have is, what are the educational programs or initiatives that are aimed at the other economy, which is the cash economy? And the reason I'm asking that is, it took us about 2 years to phase out cash, and not because there was lack of technology, but there was lack of education and engagement, where the trust that people need to build, which must come, or the confidence that must come from trust, does not exist.
100%. Thank you so much for your question there, sir. Appreciate it. You can go ahead.
Hi, I'm Stuart from Prime Insurance. Actually, similar line of questioning. We're wanting to move away from cash, but I think cash is an easy way to avoid a digital footprint. And I think a lot of people, if you have a social grant and a side income, that's the easiest way to avoid being picked up by SARS, or taxi industry is a good example. How do you change that behavior and make inroads into that space?
Perfect. Arif, sounds like both of these are right up your alley, but more happy for you to contribute as well.
Well, even through our normal course of business as banks, we've always tried to incorporate financial literacy, trying to migrate our customers from cash into digital platforms. However, that obviously has not reached the masses, and we haven't been able to penetrate what we need to. So the appreciation of non-banks also participating is that additional footprint that allows us to reach more people from our various channels to educate and migrate to the right platforms. At the same time, it's not always just a matter of communication and education. There's some regulation that also helps some of these things being taken up. And I think to Arif's earlier point, looking at to what is it that we need to tail down safely to make sure that the right people are using these digital platforms.
I think it would be unfair if I don't quickly comment. So you'll see that in the wagon wheel, that consumer education is quite central. As part of that, the NPSD, the National Payment System Department, has been doing some deep studies in two jurisdictions, Hammanskraal and Tembisa, and it's to try and understand some of the socio-cultural dynamics a lot better. It's a step in the right direction. On your second point, and I've seen this across other countries, where you want to keep to cash and avoid a digital footprint. And my response to that, and it's a personal response, is if you want to stay out, you will find ways to stay out. But there are many more people who want to stay in.
Yeah. Just the observation about Brazil and India again, I think the governmental support to actually crowd in people, from a policy perspective, kind of created an enormous catalyst and flywheel in those markets. And I think with some of the leadership we're getting from the PEM, I think for the first time, there's a real opportunity to actually see proper adoption. And the removal or kind of crowding people into that digital footprint, I think there's a whole pile of people that would graciously join and gratefully join. And then to your point, those that wish to stay outside, that's good for most of the participants in this room. Because it's some of those bad actors, unfortunately, would pollute the new space.
100%. I think phenomenal insights that have come through from your questions and, of course, the responses that we've had from the panelists. The partnerships are definitely aligned. We are looking at solutions. We are looking at making sure that the collaboration is very clear in terms of being payment participants. The regulation itself is something that we are proactively engaging with to ensure that it shifts with the needs of the market and avoids perhaps strangling any growth and innovation that does come through. We're aware of some of the challenges that are in place and, of course, looking at providing a lot more clarity and interoperability that has been highlighted, and of course getting the message to everyone. Whether we're in our C-suite executive rooms and of course making decisions on behalf of big businesses and corporates in the country, or making sure that the basic remittances can be experienced and felt on the ground by everyday South Africans and peers across the continent. One thing was quite clear though, we set this motion a few years ago. We are in 2025. I guess just to close off with you, Arif, there's a lot of work that needs to be done. We continue to come back and share feedback, proposed phased approach, and of course still working within the sandbox. But do we have a strict deadline as to the targets and timeframes that we are looking to meet?
Yeah, I'm going to quote an executive who runs the program, and the target was June 2025. So, so I guess, look, on a more serious note, you know, I think we have to be responsible, because I think Gordon or Ravi made the point that this is a lot of stuff that's changing, and Lauren, a lot of stuff that's happening at the same time. And I guess we have to be responsible as the SARB. We want movement faster, but at the same time, we have to be extremely responsible and ordering things and phasing things. So I think the target for us would be, if we could get the exemption notice and the authorization framework, I think I got the terminology right. If we can get that done over the next 3 to 6 months, and to Peter's point, make sure that we are proportionate to particular activities, big tick in the box. If we can have a robust NPS bill by the time we get to the first quarter of next year, perfect. If we could license 3 to 5 non-banks by the SARB's financial year end, which is end March, I think, in March and April, you know, that would be stunning. So that's kind of the pigs that we have in our mind.
Perfect. So we understand the metrics, understand the targets, and of course we'll make sure we host these conversations and come back to make sure that we keep everyone accountable, but also moving forward in terms of the goals and objectives. Thank you so much. We've been on a hard stop, but I think a very encouraging conversation that we hear. So Lauren, of course Ravi, Gordon, not forgetting Yumpo and Arif, really appreciate your time and contribution to the conversation. Please give them a round of applause as we make our way off stage, ladies and gentlemen. Perfect. Thank you so much. There will be an opportunity for you to engage as well with the executives of RMB and FNB, and of course making sure that there is an opportunity for us to get further engagement from the SARB as to how it is that we continue to meet these targets and timeframes that we've put in place. Well, to wrap things up for us, to make sure that we can continue to engage, get back to running the businesses and institutions we run, and of course address the questions that we were unable to get to, but hopefully some of the speakers will make time to address them. Please do also reach out to the event team at FNB and RMB. They will be able to direct any of your thoughts and questions to the right speakers, so please do make sure that that will take place. But of course, before we wrap up, we'd like to offer a vote of thanks and of course official closing. And for that, to conclude and provide us with some perspective on what we've just heard, please welcome Tamara D'Onofrio, Head of Sales at RMB.
Ladies and gentlemen, as we bring today's discussions to a close, I want to extend my sincere thanks to each of you for your time, insights, and commitment to this important dialogue on the evolving payments landscape in South Africa. Your presence underscores the shared commitment we all have to shaping the future of payments together. Today, we've heard how regulatory developments, ranging from enhanced interoperability frameworks to initiatives like PayShop, are not only reshaping how payments are processed, but also unlocking new opportunities for innovation, inclusion, and growth. The active role of regulators is driving this transformation at a pace we haven't seen before, demanding that we all adapt, invest, and collaborate in new ways. Yet this isn't just a local conversation. We are part of a global payments ecosystem, one that is rapidly converging, where new technologies and expectations around real-time payments, embedded finance, digital identity, and cross-border transactions are setting new standards of service and value creation. South Africa is uniquely positioned to tap into these opportunities, given its sophisticated financial system and its ambition to be a leader on the continent. At FirstRand, through RMB and FNB, we are deeply committed to being your trusted partner as we navigate this transformation together. Our ambition is not just to provide solutions, but to co-create them with you, ensuring that your businesses can thrive in a world where payments are faster, safer, and more integrated than ever before. We understand that the challenges ahead, be they technological, regulatory, or strategic, require collaboration and innovation. That's why we are investing in the capabilities, the platforms, partnerships, and expertise needed to solve for the underlying drivers of these changes, not just the symptoms. I would like to take a moment to extend my sincere thanks to our keynote speaker, Arif Ismail, whose invaluable insights and thought leadership have helped us frame the opportunities and challenges in the payments landscape. Your contributions remind us that the critical role that regulatory vision plays in fostering a more inclusive and dynamic payments ecosystem. I would also like to express my gratitude to our panel members, Arif, Gordon, Lauren, Mpo, and Ravi, whose deep expertise and diverse perspectives have enriched today's dialogue and provided us with tangible ideas to navigate this complex space. Finally, a special thank you to our moderator, Gugulethu Mfupi, whose skillful guidance and kept the conversation both engaging and focused, ensuring that every voice was heard and every perspective considered. Your collective efforts have made this morning's discussion truly meaningful, and I look forward to building this momentum together. I also want to extend my heartfelt thanks to my co-host, Zach, and to our marketing and events team, Mawinda, Susan, Shelley, Penny, and Janine, whose dedication, meticulous planning, and tireless efforts have made today's event not just possible, but truly exceptional. In closing, I want to thank you all once again for your participation, your questions, and your insights. It's through these conversations that we lay the groundwork for the future together. We look forward to continuing this dialogue in future, deepening our partnerships, and building the solutions that will define success for all of us in this new payments era. Thank you, and have a wonderful day further.
Mama